Good day, fellow investors. There have been a lot of comments recently, questions about Lululemon. My wife has recently bought some Lululemon apparel, so it is a great place to start researching the stock. I think I can give you 3 value points when it comes to Lululemon stock, the stock price relativity and valuation, the P/E ratio and how it compares to others. I think it is much better than Nike, for example. Now, the international expansion that offers value, and then we'll finish with the risk and reward standard intrinsic value that we make on this channel. Like and subscribe for more. So the reason for the discussion on the stock, of course, the 40% decline in the last 6 months, the P/E ratio going from 40 to 24, below Nike's of 27, I think now, and negative stock price developments with still very positive results. 10% growth in revenue, 11% growth in earnings, buybacks, everything looks good. Sales have been growing except for the United States, where there is, let's say, a little bit of stagnation, but China is growing 45%, so the Chinese are going off Nike and more towards Lululemon. Rest of world, 27% growth, so their international growth is going strong. They have been stagnating in the US, but they now bought some stores in Mexico, where they should then continue building on. Gross profit, 57.7% of revenue, that's a high gross profit margin. Healthy business, thus profitable business, will survive many ups and downs. Net income, 320 million for the quarter. They are doing buybacks with the net income, lowering the number of shares, and they have still 1.7 billion remaining on the market cap. That is 4% buyback. Also focus on that. With the stock price lower, buybacks are better. Now, I have looked at what analysts are saying, and this practically summarizes it. So, competitors taking market share, Yoga, Worry gained on the market share, and compared to just 40 basis points growth for Lululemon. So, Lululemon is still growing, a little bit less than these likely smaller competitors, but the market suddenly, because the stock price is down, gets concerned. They prefer Nike. I don't know why, we'll discuss that later, but they still have a positive, as always, target price. The story with Lululemon, they are into their second 5-year plan, delivered on the first one, and they want to double from 2021 to 2026, and they're on the path of reaching those 12.5 billion in revenues in the next 3 years. As they say, the power of 3, second time into that digital, men's, and quadruple international scaling there. And when you look at the situation, you see that they have a stable number of stores in the US. That exclusivity is kept. But if I look at the rest of the world, the number of stores is really minimal. Keep in mind, Europe has doubled the population of the US and has 10-20% of the stores. This is how it is now. Also China, Australia. So I think they have the runway to quadruple international and then keep on quadrupling there. Nothing wrong there. If they reach this and keep growing a little bit more, then maybe also we'll see stock price growth. Now, let's go to the first of our 3 points, the stock price relativity and valuation, and we'll discuss the delta of the delta tool when it comes to this. You see this big drop, and then you might be confused because the business is still growing. Let me show you the delta of the delta tool for growth stocks. This is the P/E ratio of Lululemon. Now, as it was like this, we are there in the 20-30 range. Then when they start growing and the business exceeds expectation, we went to the 60 to 40 range. Exuberant post-pandemic times, 60 to 80 range. Then dropping to, let's say, the historical means, 40-ish, again growing above expectations, and now we are back to the bottom of these historical because the stock is growing a little bit below expectations, or to better say, stagnating in the US. This is the situation. If you have a growth stock and results are higher than expectation, this leads to a higher P ratio because people expect more and more and more, and a higher stock price growth. On the opposite, if the situation is lower, like they are now stagnating, then the P ratio goes from 40 to 25, and that's a 30% decline in the stock. You can check my Visa video from 2019 discussing this tool more in detail. And this is what has happened: exuberant and now a little bit of panic. Now we have to see where that exuberance and panic, where is the mid value point for what kind of investment Lululemon can be for you. Let's first discuss quickly international expansion, the value of it, and when I look at the guidance, they still plan to grow 10 to 11% also in 2024. Likely, if they can regain that growth traction in the US, then this could be a little bit better, but still growing in Asia and Europe, international digital should be enough for them to continue their growth story. As you can see here, they have been growing, they are still growing, and if they continue like this, 2025, 2026, I think they could reach their 12 billion in revenue. On the current margins, that's 2 billion in net profit. That would lead to a P ratio of 18 in 2026 on the current market cap. Now, if they keep on growing, the market will say, always compare P ratios with others. Nike is growing at a slower level, it has a P ratio of 27. So if they go from 18 to 27, that's 50% up. Growth 10%, P ratio goes from 18 to 25, 50 billion market capitalization with the buybacks 40% up. Next topic to discuss, we have to discuss the intrinsic value, the risk and reward. International value, as said, 40% growth leads to 10% overall growth. As international takes more revenue share, it should be even faster growth. So this could go to 12%, 14%, and then you also have a revaluation of the stock. As you can see here, with the buybacks and everything, a little bit improving in margins, the EPS will go to 14 2024, let's say 16 2025, 17, 18, 2026. If the stock reaches 17 earnings per share in 2026 with a P ratio of, I don't know, 20, that's 340, P ratio of 25, 30, you are already at 50% up if the market starts seeing the growth again. Of course, there is always risk. If there is a recession, the growth slows down to 5%, P ratio of 15, that's 2025. So that is the risk when compared to the reward. And now, the key thing is, if US gains traction or international growth becomes a bigger and bigger weight in the company's sales, but you can see here, Nike has a P ratio of 27, that's more expensive than Lululemon. Even if I think, and I discussed that in this video, Nike, I think that Lululemon has a much longer runway because Nike is already saturated and will grow in line with the market. Lululemon still has place to grow over the world, especially internationally, and therefore I think, relatively speaking, it is a much better buy than Nike. It is cheap to its relative pricing history, and it offers that upside of 50% if they keep on growing. If they become trendy again globally, then you can have that 5x from the current level, 3-4x. On the risk side, they have a pretty established position, still doing well. You have 30-40% downside in worst case scenario, 50%. So the risk and reward is positive there a little bit. Now, I will do like everyone is doing these days. I'll put $300 on myself, because without putting $300 on yourself, you cannot do yoga, and now I can do yoga like all the Lululemons out there. Finishing with a joke. See you in the next video.